We're coming out of a year where the Fed held rates for the majority of 2025. They're now signaling a very shallow easing path into 2026. Joining us from Spain, Daniela, market analyst at Capital.com, to unpack what this really means. Danny, great to have you on the show. How would you summarize what's going on at the moment, and where do you think the Fed would be positioned ahead of the next FOMC meeting?
Hi, Ricardo. Well, that is the key question, and that's what's been driving a lot of the volatility in markets. And I think because we've had a little bit of a data void with that blackout that we've had in the US government, markets are kind of flying a little bit in the blind. So the question really is, it depends who you ask. If you're asking markets, they seem to be pretty convinced that the Fed is going to cut rates at their meeting next week, roughly about a 90% chance priced in. If you're asking the Fed, I don't think maybe they're as sure about that, and it could be more of a 50-50 layout there. So it's really a question of what's been driving these expectations and what exactly the Fed is going to do at the meeting, and that divergence or discrepancy is what's going to drive a lot of the volatility in the coming days.